Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern on Nifty, Bank Nifty, as well as on the different asset classes. Now just let us discuss what we have mentioned in our last video. In our last video we have mentioned regarding the golden crossover, which means that whenever the short-term moving averages cuts the long-term moving averages from below, that clearly indicates the start of a mega rally for next 3 to 4 years. And accordingly, we have discussed the examples of last uh, given example of last 20 maybe 20-25 years, showing on Nifty and Sensex charts, that from the point of breakout, or from the point of the crossovers of that particular golden moving averages, crossover, Nifty and Sensex has tend to move 50% from those levels. So that particular level was almost around, coming around 16,000 to 16,500. And if it from current level, if we calculate that particular levels, then in next 4 to 5 years we might see Nifty testing the levels of maybe 24,000, 25,000 and above from these levels. So looking at this chart setup, now we will come to to the short to medium term trend. Yes, it is a challenge that Nifty, when Nifty is going to test 18,600 mark, maybe in Diwali or so. Yes, that time will tell. But what I want to mention is that primary trend is positive. Any dips should be used as a buying opportunity, or if there is any kind of fall from these levels due to the geopolitical tension across the globe, that should, or we can consider it that that should be the last chance for long term investors to build portfolio for next 4 to 5 years. Take this as an opportunity to accumulate your desired stock or your desired portfolio, build your portfolio and hold it for long term. So now let us come to the daily charts of the Nifty, and we'll try to figure out what you have analyzed. Now this is the daily chart of the Nifty. Now let us see. We have been discussing regarding this particular downward falling trend line since last many months. This was a time correction which we have been mentioning since last 10 months. uh, when RSI was almost 80, 83, we have been cautioning that markets are overbought. We might see some sort of profit booking coming in. Profit booking did came, but as of now, we see that RSI has also entered into a comfort zone. But last 2 weeks, most probably 1 week was a truncated week. Nifty has been consolidating. So let me draw a parallel channel, which will give us an idea that in which range the markets has been in consolidating in a tight range. So this is the area where Nifty has been consolidating in a tight range. So the most probably the breakout point from these levels would be around 17,777. Currently Nifty is quoting around 17,539. This is the daily charts. Now if we look at the weekly charts, the weekly charts has indicated a strong week, strong closing. It was a bullish candle. So next week also, I am taking it that any dips from here should be used as a buying opportunity, because after 2 weeks of prior to bullish week, I mean to the last week, 2 weeks of consolidation, and we have seen that Nifty has given a strong bullish candle on the weekly charts. But now let us discuss what could be the entry point. Yes, on Friday we have seen an indecisive candle. It was an inside day candle. So from these level, if there is any kind of dip, that should be used as a buying opportunity on the downside. US market has also ended on a negative note on Friday, but throughout the week, most probably last 2 days in the US markets also has rallied, and on Friday we have seen that it has just corrected from that particular swing high. So most probably Nifty is into a tight range of consolidation. Breakout point would be 17,777. Once Nifty breaks those levels, then we will see a start of, or what we call as a clear cut uptrend from this particular congestion range. So the strategy would be buy on dips in the next week. So now let us discuss the important supports and resistance level in the Nifty for the next week. The important support in the Nifty for the next week is placed around 17,401 is the first support. Below that, the next support is coming at 17,312, and third support in the Nifty is placed around 17,166, which was the swing low of last couple of days. Whereas on the upside, the first resistance is placed around 17,695. Above that, the swing high, which is the second resistance, the level is 17,777, and if it breaks those levels, then the next resistance is around 17,992. So these are the important supports and resistance level in the Nifty. Traders should try to watch out this level closely and then trade accordingly in the direction of the trend. So maybe next week could also might be a challenging week. We might see some sort of volatility coming into the markets, but as of now, what I feel that the strategy should be a buy on dips. Any dips should be used as a buying opportunity. So now, friends, let us discuss what we have observed in Bank Nifty. Let us go to the Bank Nifty daily charts. In the Bank Nifty daily chart also, we have seen that Bank Nifty has also been stuck into this particular range. You can clearly see that Bank Nifty has stuck in this particular range of 39,759, which was a swing high, and on the downside 37,950 is the support region. Currently, Bank Nifty is well poised for a breakout from these levels. So as we have seen that last week also, Bank Nifty had traded on a positive note. This is Bank Nifty daily charts, and let us just have a view on what is Bank Nifty weekly charts. Now you can see Bank Nifty weekly chart is showing an engulfing bullish pattern. Last week, I mean to say prior to last week, was a high wave candle, and last week was an engulfing bullish pattern on the Bank Nifty weekly charts. So this engulfing bullish pattern is clearly indicating that Bank Nifty might give us a breakout in the next week. But as I said, next week could be highly volatile week. So any dips should be used as a buying opportunity in Bank Nifty from these levels. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is around 39,200. Second support is around 38,800, and third support is around 38,397. On the upside, the first resistance is around 39,759. Above that, the second resistance is around 40,160, and third resistance is around 40,508. These are the important supports and resistance level in Bank Nifty. Traders should watch out this level and direction of the trend. Let me tell again that strategy should be buy on dips for the next week. Now let us come to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out, or we'll try to study the data of calls and puts of Nifty and Bank Nifty. Where is the open interest? What is the implied volatility? What is the percentage change in the options premium in calls and puts? So now let us discuss what we have observed in Nifty calls. You will see on the screen, in Nifty calls, the action was seen in 17,600 calls, then 17,700 calls, 17,800 calls, 17,900 calls, and almost again in 18,000 calls also, which is the psychological count. Now here you can see the volume is also on the high, the open interest is also increasing, implied volatility is just between 15.65 to 15.70. It is just almost what we can call it as a flat implied volatility. The percentage change in the premium of the options are slightly negative. That was because that the markets had remained range bound on Friday. So maybe the markets is waiting out for some breakouts. At these levels, we feel that even the markets or the smart money is waiting for a clear direction. Either they might be waiting for some dip, or they might be waiting for a breakout. Breakout in the sense which we have been discussing, that 17,777, that is the congestion range point. If it break those levels, then Nifty might start rallying its or starting will start its upward trajectory. So maybe we might see some sort of cool off or some sort of consolidation in Nifty. So on this data, it doesn't give you any clear indication, but the data is so. So markets might be waiting for some sort of cool off from these levels. Now let us discuss what we have observed in Nifty puts. In Nifty puts, the action was seen in 17,500 puts, then 17,400 puts, 17,300 puts, 17,100 puts, and even 17,000 puts. Here also, there has been rise in the open interest, there has been rise in the volumes, there has been a minor change or a negative change in option premium. Implied volatility is slightly higher, it is between 19.21 and 20.06. So it clearly indicates that somewhere, the smart money might have started writing Nifty puts, but this is not indicating an aggressive writing in Nifty puts, because implied volatility is rising 19.21, and it is between 19.21 to 20.06. Maybe a further fall from these levels might uh, trigger shoot up of, or might give a push in shooting up of implied volatility, and after that we might see smart money strongly writing Nifty puts, and writing Nifty puts, which clearly indicates that markets are poised to to trade with positive bias in next week. So now let us see what could be the trend in Bank Nifty. Now let us discuss what we observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 39,800 calls, then 40,000 calls, then 40,500 calls, and above that even we have seen in somewhat of 40,800 calls. Here also there has been rise in the open interest, rise in the volumes. Implied volatility is between 18.84 to 19.45. There has been a minor fall in option premium. That means again no weakness is seen in Bank Nifty at these levels. And as we have seen on the charts, then Bank Nifty is always on a verge of a breakout out of that particular range. It is just near its breakout point. So maybe we might see a breakout in Bank Nifty also. But as I said, if there is a pullback, one should wait for that particular pullback and then trade or build long position at the lower levels. Now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 39,200 puts, then 39,000 puts, and 39,000. Sorry, 38,500 puts. Now here we can see there has been a rise in the open interest, rise in the volumes, implied volatility shooting up. That means it is between 22.29 to 23.61. It is already in some sort of danger zone. We have seen a significant drop in or sizable drop in option premiums, which clearly indicates that smart money might have started writing Bank Nifty puts or out of the money Bank Nifty puts. That means on the downside, 38,500 could be the strong support, or above that 39,000 could be the strong support. So downside in the Bank Nifty is kept. So any dips should be used as a buying opportunity in Bank Nifty also. So now looking at the overall data or overall data of charts in Nifty and Bank Nifty, and option data of Bank Nifty and Nifty, which is indicated that some sort of a pullback or pull off cannot be ruled out in the next week, and that pullback should be used as a buying opportunity. So next week could be highly volatile for the traders. So traders should trade with strict stop losses. So friends, let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is UBL. The stock has been consolidating for a long period of time. The chart is showing that it is on the verge of a long-term breakout. Let me put an indicator so we will have a clear view about that particular stock. This is RSI. The name of the stock is UBL, United Breweries. So you can see the stock has been consolidating in a U formation, or you can call it an inverse head and shoulder. This is left shoulder, this is head, this is shoulder. The breakout, the stock is yet to give a breakout. You can see the volumes are also slightly rising on the right shoulder. RSI is also on the comfort zone. But let me show you that the stock has already given a breakout from a triangular pattern. So which is clearly indicating that stock is on a verge of a big up move from these levels for long term. You can see if I take whole chart, so you can see the stock is near its lifetime high or just below its lifetime high. Stock is on the verge of a breakout. Volumes are rising. It is inverse head and shoulder, but maybe the neckline is at all-time high. So stock will take some time. The all-time high is around 1790. Currently, the stock is quoting around 1705. Last 4 days, the stock has rallied from the levels of 1589 till 1719. So if we consider it as a triangle breakout, long-term investors can accumulate the stock on dips to 1675. Currently, the stock is quoting at 1705. Long-term investors, swing traders, positional traders can accumulate the stock on dip to 1675 for a long-term target of 2000, maybe in next 10 to 12 months. And as I said, swing traders or positional traders, those who want to trade for maybe next couple of days, maybe for 10 to 15 trading sessions, can buy on dips for an upside target of 1800 to 1850. So definitely the stock is looking good for long-term investment as well as for short-term traders. So thank you very much friends for watching the show. Any comments you can give in the suggestion box, and have a nice trading week. Thank you.